You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time, once again, for a little show we like to call around here, the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you're saying to yourself, what is that? First off, welcome to the show. B, if you're just listening to this show, there's a whole universe of other programs out there you can sink your teeth into, or perhaps your ears. In this case, easiest way to do that, of course, head on over to the mothership, the flagship, theoptionsinsider.com. That's the place from where all of our content flows, written, audio, and otherwise. You can sign up for our email newsletters there, follow us on social media, all that good stuff. And then, of course, if you want to mainline the audio, to search for our network, any major platform, iTunes, TuneIn, Stitcher, even, of course, via their app stores. Just look for our app store, our app, I should say, in the iOS and Android app stores and the Fire OS app stores. And you, too, can listen along. Speaking of listening, you can always listen live. We put out a nice little bonus. We do live stream this bad boy for the hardcores of you out there as well, every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via the old Mixlers, MIXLR. If you follow us on social media, you've seen that link before. Grab it, save it, bookmark it, and you can, of course, follow us on Mixler if you're inclined as well. And you'll know exactly when we go live to break down all of the good stuff that we have in store for you each week. And speaking of good stuff, we got a good panel in store for you today. We're mixing up the All-Stars a little bit, which is always a little bit of fun. Let's start off, though, with a regular beaming in from that scenic and lovely hamlet of St. Charles, where we are joined by none other than Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
You know what? I'm happy to be here. We've had the privilege of getting to do this show for well over 600 times, and God bless America. We get to do something like this, talk about options on a beautiful afternoon like this. Don't know if there's anywhere else I'd rather be right now, quite frankly.
There you go. Maybe your answer could be Savannah or Atlanta or somewhere down in the Southeast. He's somewhere in that region, where we are joined by the tubster himself, good old Matt Benson, the floor broker extraordinaire, former down there at CBOE, many years filling paper over there on the CBO. Now he's usually the man about town of Chicago. Now he's the man about town over there in the Southeast. Mr. Tubby, welcome back to the Option Block program. I think 3 weeks running now, sir.
Thank you, Mark. Happy to be back, and happy to be in the South. It's only about 102 degrees with a heat index of about 112. So quite comfortable down here.
Perfect weather for you then.
On that note, it makes me very happy to be in St. Charles today.
I would wager.
Nothing a 290-pound guy loves more than that kind of heat.
I was going to say, I know you're looking to shed a little bit of weight, so maybe that was part of your purpose. It's like living in a sauna down there.
Down here.
It's like you're living in a sauna down there in the Southeast. And last but not least, joining us from parts unknown. We don't know where the heck this guy is. Let's see if we can find him. He is the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program, sir.
Hey, coming to you live from the Ames Elementary School playground. It is. It's the only place to be. It's 75, partly cloudy. Where else? And I'm watching lots and lots of kindergartners, first and second graders play. one of which is mine. I don't just hang out at playgrounds, people. One is mine, and it's a beautiful first day of school.
When I think of the places that are, the options and indeed the volatility meccas, you think Chicago, you think the exchanges, you think maybe a little bit of New York, maybe a little bit of London. Then, of course, the playground of an elementary school, right there, number 4 in the slot there. So we're hitting all the meccas, Southeast, Playground, St. Charles, all the meccas of all things options should be good. Thank God somebody's here holding down the fort in the mecca that is downtown Chicago, where we're beaming to you from as we roll right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the man said, this is the portion of the show where we break down what was moving, shaking, or perhaps not so much out there going on today. A little bit of a quieter one, at least to end the day out here. Most of the major indices finishing up pretty much slightly in the red, but nothing super crazy to write home about. S&P off about 0.25%, even less than that. The Dow, the laggard, almost unched on the day, and tech-heavy NASDAQ shrugging a little bit more than the others, off about 0.3 percentage point. And it was a mixed day on the street. It seemed like VIX cash is going to be giving up some of that ghost as well. And towards the end of the day, when everything started tilting towards the red, VIX tilting into the green, ending up the day up about 1/3 of a handle or so, right around the 12.55 level up there. 2.5% for those of you percent-to-percent fans. I know someone's going to ask that. So there you go. I got it out of the way for you at the top of the show. So yeah, compared to some of our other recent days and shows where there was fire and fury and brimstone and craziness and monuments and being torn down and all this other crazy talk, a little bit quieter today, which is probably a good thing. We can all probably maybe take a little bit of a breath of fresh air in that one today. Speaking of fresh air, Tubby, you're out near it, so why don't you kick us off? What, if anything, caught your eye today while you were holding down the options fort there in the Southeast?
Actually, I spent about 5 hours in the car this afternoon and arrived about a half an hour ago. And what caught my eye, sadly, looking in the last 15 minutes, is a moment of silence I'm going to have for all the call buyers in Ulta at the close today. A lot of activity on September 1st, 260, 270 calls, right? And a lot of August 25th calls as well trading. And that stock now down almost $20, right, as earnings broke. So that's about all that's been caught my eye. Now it's on a 207, so down $27 from 234. That's about all that's caught my eye so far on midday, and I feel bad.
Wow, that's a nice move. And I'm
glad I was too late to jump on the call spreads.
Yeah, sometimes they're wrong, and that's why I don't really play earnings a lot. As a vol guy, I can usually play vol, but the only time I can is when earnings are kind of crazy. We had some interesting Amazon stuff go on. Amazon kind of affected all retail. Costco got smoked because Amazon pull up a chart of Amazon. It looks like a dumpster fire. It is bad. It's as bad of a chart as like Costco and some of those other retailers. But they're going to close on Whole Foods, and then it rallied off of that. It's down 16. I think it ended up down about 8 today, something like that. That was that and kind of the price action of the market. We slapped the 50-day moving average and bounced right off of it. People are a little worried about Jackson Hole. They're a little worried about the debt ceiling. VIX was bid, but futures were off a little bit from yesterday's ramp up. Feels like we're, the whole half-life of Donald Trump sayings has started to come into effect. It used to be his tweets could drive things. Now they don't. Now, as he says stuff, it's driving things less and less. So I think we got a little bit of vol ahead of Jackson Hole. It'll be interesting to see what's said after that.
Good old Jackson Hole, the other mecca of volatility I neglected to mention there at the top of the show. Jackson Hole, Chicago, New York, and of course Savannah, Georgia, and of course all sorts of playgrounds nationwide. But you mentioned, Ulta. They were pricing a little bit of juice, right around $20-21 for that earnings. So they were expecting some sparks, some fireworks at closing today. 233.71, up about 0.75 of a percentage point intraday, and then as Mr. Tubby alluded to, taking it on the chin here in the after hours, off about 7.5%, or about $23.50 or so in the after hours right now. So this thing just taking a drubbing. We'll keep an eye on that one and see how it plays out. Before we get to some other names that are popping off after the bell and some other items, let's go to the comparatively quaint and quiet hamlet of St. Charles. Uncle Mike, it's always scenic and sunny and 72 out there. What was catching your eye in the paradise on earth that is St. Charles today, sir?
It's ironic. Every time you say it's always sunny and scenic and 72, it usually is sunny and scenic and 72 here. But a couple things just to add to what Mark said on Amazon, Whole Foods. I believe they had also made some announcements that they're going to do some price adjustments with Whole Foods and possibly give some discounts to Prime members and things like that. So I think that is something that it did affect a lot of the retail names within just a few seconds after the announcement was made during the day today. I also think Jackson Hole is definitely on the minds of investors, but I don't know if we're really going to get a lot of action from that immediately. In terms of the Trump trade or what's going on in the Trump White House with everything he's doing, from a political standpoint, I think he did a good job on Monday night rallying the base with his speech in Arizona. Once again, I'm not trying to endorse one candidate or another or one party or another, but I think from a political standpoint, it was wise the way with which he handled that. In terms of what's coming up with things, a lot of the things with which were mentioned, I agree. But a couple of other things that need to be thought of is, number one, we're getting closer to Labor Day, and the sell in May and go away idea of the summer doldrums is going to be coming to an end soon. And the other thing, we got a big old hurricane or something headed towards Houston. And the thing of note today is that we did not get a lot. We had a little bit of a drop in oil today, 79 cents in oil and crude. On XLE was relatively flat on the day, but those are some that I'm definitely going to be watching over the next couple days because if we destroy some oil fields down there, that's something that could be of some significance to the marketplace over the course of the next couple weeks.
Other things that are significant to the marketplace here immediately in the after hours, the Tubster mentioning Ulta, one of the few names. There still are some names on the radar, some smaller ones left. There still are some names in the old earnings calendar for those of you who like to focus on the micro. I know a lot of you do, rather than wringing your hands over the macro that is out of your control. GameStop also popping off after the bell. I know your counterpart over there, Mr. Meatball, the Rock Lobster, loves the gaming sector, at least he used to. GameStop closing today, $21.78, up about 30 cents, or about 1.5% almost. They were pricing in, let's see, what were they pricing? Pricing at about $2, so right around 9, a little more than 9%. And so far in the after hours, they're off about a little over a buck. About $1.10, so off about 5%. So not exactly an apocalypse. The people have been kind of pronouncing the death watch for this name for quite some time. You know, their whole bread and butter has been effectively creating their own used aftermarket for games and real games. And of course, digital media kind of eliminates most of that. So people have been watching this one for a while, predicting the end of that. But so far, at least, they've managed to stay ahead of the game. I think they sell a lot more tchotchkes now than they did before. So that's probably been one way for them to kind of stay ahead of that. We'll see if that continues. But at least the market not liking what they're seeing, but perhaps not quite as bad as they were pricing in. But we'll stay tuned for that one. A few other things catching our eye here. And a relatively quiet day out there. Excuse me. Saw an interesting chart someone sent our way today. I think this was coming off of out of stock twits over there. I think you'll like this one, Uncle Mike. Someone put together, this is always this debate, how much money does Apple have? How much money, what are they going to do with this cash? Someone sent over a chart. I believe this is from last quarter, so maybe a few months old, but the numbers are pretty much in line. The market caps may have changed a bit, but it's pretty similar. Someone said, well, here's what Apple could buy right now with what they had on hand, which was about $257 billion at the time that this chart was infographic, I should say. Chart is too small a word for this. Infographic. What they could buy, and if you add up all the things they could buy with their cash on hand, Time Warner, which at the time was $77 billion market cap. Throw on an Uber, which they give at $68 billion. You know, I'm not a big fan of some of these non-public company valuations. They're all a little bit kind of smoke and mirrors, but that said, they priced that at $68 billion, so throw that in there. Sony, about $43 billion, throw that in there as well. Airbnb, another kind of aftermarket non-public valuation, $31 billion they give for that one. I'm sure their VCs would be happy to maybe get some of that money. Twitter, $13 billion, only $13 billion for the old Twitter. And Snap, this one obviously has come down a bit. This one was at $25 billion at the time. You can add all that up, and they still have some cash on hand. Of course, they're also saying they could go out and just buy Disney. That's been a rumor they've been talking about for a while. That one at the time was about $177 billion. I think the market cap's a little bit north of that now, but they could still buy all that with cash on hand. Uncle Mike, you were just talking about rolling I think it was your 160 calls out there in Apple just last show. What do you think of this? It's just fun, I think, pontificating what they could buy with all this cash they're sitting on.
It's interesting. Here, I'll add one more. They're talking about the debt ceiling being raised and how Trump will shut down the government if he doesn't get his wall money or that type of thing. Apple should buy the wall. They should buy the U.S.-Mexican wall and just get sponsored by Apple all over the wall.
There you go.
One side to the other.
That's just a PR bonanza waiting for them. All sorts of goodwill involved there.
For sure. Let's have fun with this.
There you go. I'm guessing if they did that, you might be selling those, or maybe selling more of those 160 calls and buying some puts to boot.
Most likely, yes.
So there you go, listeners, all those out there who've asking us, what's Uncle Mike up to in Apple these days? He's advocating that they go out and finance the wall. So there you go. All right, good stuff. We like those little nuggets of info, and sometimes you guys always hit us up with questions. And we like you when you share us infographics as well. Hit us up at options for all of that good stuff. Some more listeners sending these good nuggets today. Speaking of good nuggets, we got some for you. It's time to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that music means it's time for the Odd Block. Strap in. We got some silly, fun, weird activity catching our eye today. Gonna kick things off, as we always do. You guys always ask, so we deliver. These crazy put update out here in Tesla. Yes, they're still printing the Jan 2019 50 puts going up today 102 more times, total of 28,475. Kind of hovering right around that 28.5 level in OI of late. The last few weeks, a little bit lower, a little bit higher, but kind of hovering right around that level of late. Also worthy of note, 232 of the Jan 2019 70 puts. So we were talking before, maybe some ratios coming in. This seems like a reverse ratio, 2-by-1. I probably would do it the other way, but say, interesting nonetheless if this did indeed go up. Yeah, but only about 2,800 contracts open on that strike. Actually 7 of the aforementioned par puts, the Jan 2019 par puts. So a nice little, still a little of activity out here in these juicy little crazy puts. You know, Mr. Tubby, I know you've been busy driving around, but I don't think we've ever officially gotten everyone else's take on these, and our listeners have weighed in with their takes for ages. I'm curious, what would your take be on these, shall we call them very crazy, out-of-the-money puts here in Tesla? Why do you think someone will be loading up on, to this point, 28,500 of these crazy 50 puts here?
Honestly, this one's a pretty strange one to me. I don't necessarily care for the stock either. I'm not one who believes all the hype in it. But, man, that's a long way out of the money. I mean, even if you were to get just an incredible vol pop on a 60, 70, 80-point drop in the stock, I don't know if these would move that much. I think you'd really need to see something come out along the lines of, a bankruptcy or some sort of pyramid scheme, factual evidence to make these things come out. And there are people, if you scout Twitter, there's a couple people out there that absolutely can't stand Tesla. I think it's Mark Siegel's.
I think Mark Sebastian is one of those people, man. Yeah, I mean, I think
Siegel on him.
No, I'm not. But I'm telling you, there is a legitimate chance that go get in the house. There is a legitimate chance that they go bankrupt. And that's what these puts are for. We saw similar price action back in the day in old GM. I mean, people would just buy stocks trading $35 and people are buying up to 2.5 and 5 puts. It's usually debt holders that are buying this way out of the money stuff. Usually debt holders.
Well, we did see that they added a bunch of junk or bunch of shall we say aggressive debt of late. We joked recently how those people don't play. They want your assets and they're first in line to get them. So adding a little bit of debt, a little bit mixing up the game a little bit over there in Tesla land. These puts, of course, were going up way before that. Maybe someone knew something. Maybe someone was planning that out ahead of time and they priced it up, or it could be just people keep trading a couple hundred of these a day. they keep loving that strike for whatever reason. The fact that they've been bid to high heaven doesn't seem to be deterring anyone to come play on this strike. Speaking of playing and keeping things alive, let's move on to our first actual name, our actual victim out here. If you like our cheapies, we got a cheapie in store for you. This is good old Genworth Financial, ticker symbol GNW, closing today $3.49, rallying a whopping 2% today. So big day for GNW, up about 7 cents on the day. Yeah, so big day in GNW. This is the name, if you're not familiar with it, that does, about 2,200 contracts a day. Today doing about 49,000. Of that 49,000 and change, 48.5 coming in the calls, 641 in the puts. So that's about almost 76-1 calls over puts. So let's just talk puts. No, of course, we're going to talk the calls. What we noticed here looks like someone trying to keep the old party, the faith, call it what you will, alive out here in Genworth, and doing it for some decent size. We noticed a SEP-DC 4 call spread going up. Pretty sizable chunks of about 23,000 and change, 23,390 to be precise out here, with the SEPs trading for about a nickel, hovering right around, I think that was the bid actually, and then the D's trading for about 50 cents, right around, pretty close to where the offer was at the time as well. The open interest on the SEPs about 35K. Open interest on the D's is pretty nominal, about 6,500. So clearly open in paper on the D's. Looks like Mr. Tubster, perhaps we'll start with you. You've executed a roll or two in your day. This looks like someone is keeping that party alive. Those SEPs getting a little cheap now. Maybe they were a little bit optimistic with their call that it would break through the SEP handle by September. The 4 handle by September. So they're deciding to buy themselves another quarter or so, doing it all the way out to D. So let's look at the year that's been out here in good old Genworth. This thing has been north of 4, and it was north of 4 as recently as the most recent earnings back in April. Actually, 2 earnings cycles ago. That's the last time it broke 4. It was trading around $4. It got as high back in October of last year of around 5.25 or so. So it has been north of that level. Someone clearly holding out the hope for another optimistic rally and keeping that hope alive. Mr. Tubster, we'll start with you. What do you think of this pretty sizable roll out here? I think this guy's just throwing good money after bad, or you think maybe he's onto something here?
Well, I mean, certainly losing 72 cents on your initial purchase of these and then doubling down, it depends on how much good money he's got. It's certainly a cheap play in the financial sector of something that hasn't been. And some of these financial stocks have, a lot of them are trading at near 10-year highs anyway. So maybe it's just a play to get in on something that, should be rallying along with the group and isn't.
Yeah, worth noting that this guy, you're right, this guy did kind of wear it on those initial SEP calls. So yeah, he's clearly got at least one more in him, and he's willing to do it. Mr. Meatball, what say you? Are you in the good money after bad camp, or you think this guy may be onto something?
You mean bad money after bad money?
Yeah, that's
after
true.
Bad?
That's true.
That's more what I think is happening. And these little low-priced names, it is very difficult for them to get out of that. They get day traded around. They get moved around so much by some of the trading firms that it can be difficult. But hey, you know what? God bless him. Let's see. Maybe he's right. Maybe this thing is on its way back, on its way to 10. Who knows?
You know, it's funny. This is one of the days I wish the Viceroy was on the show, because he would certainly give this guy an earful, trading 40,000+ contracts in a $3 name. I don't think that would be up his alley at all. Let's see. Maybe we'll move on to another name. Maybe that'll be more up your alley. Maybe up someone else's alley as well. This is, we like to play in a lot of the various flavors of Spider. Today we're going into the metals and mining flavor, a.k.a. XME. Closing today, $31.29. Pretty much unched on the day. It's the name that does about 7,200 contracts a day, doing about 38,000 today, almost 5-to-1 calls over puts. And that is also where our attention, our eye of Sauron, was drawn today, out to Dees. If you look and you want to play along yourself, listeners, it was a Dees vertical that caught our eye. Instead of rolling out, this guy's just rolling on up. It was the Dees 32-35 vertical, going up on a bit of a ratio, which perhaps indicating a little bit of a house money roll, or perhaps some other axes to grind here as well. We saw 10,000 of the Dees 32s going up for $1.44 versus 15,000 of the Dees 35s, those going up for 50 cents, leaning closer to the offer on the ladder. So it looks like our friend perhaps doing the old closing out of the 32s. Those are getting close to the money and rolling on up. 11,000 and change open on the 32s, pretty much nothing open on the 35. So it does seem like perhaps our friend taking advantage of today's size move, aka 2 cents, to roll these bad boys up. Interesting timing if that is indeed the case here. Let's look back a little bit. Also worthy of noting that 2,400 the 33s did go up as well, and there is some size open interest on that strike as well. So there is, and also size open on the 36s here. So people have been playing in some of these strikes for some time. Our friend here could be adding on if he is one of those players. Looking back at the year that's been, we all know it's been a kind of a tumultuous year in the sector, the metals and mining sector. This thing got as low as about 24 and change back in October of last year, and hit a high of about $35, very close to it, right around earlier this year, February of this year, before kind of vacillating around quite a bit, dipping back down to 28 recently and rallying back up to almost 33. So it's kind of had an interesting, pretty tight range in the last few months. Our friend here, though, liking the 32 strike, seems like that worked out for him. And now if the ratio is any indication, and we usually, when people do more size on the second leg, that could be a good sign they're sitting on some house money. He's keeping that party alive, wants this bad boy to break through 35 and head north. Makes me miss a Tubster. We'll start with you again, just because it's fun to say Tubby. But what are you thinking here of our friend? Do you think he is indeed rolling up and doing the old house money roll? Think he's got some other axes to grind, maybe with some of the other strikes going on around here? What's your take here?
Well, one of my favorite people in the world to follow is my good friend Henry Schwartz. And from what I can see what he said, looks like back in June, someone had opened a bearish risk aversion. They bought the D26 and sold the D26 put, sold the 32 call. It's probably long quite a bit of stock. And with the stock up nearly 8 to 9% since that time, it looks like he probably ate the put. And now he's rolling the call up against the long stock and just shorting a higher strike. So probably a big winner on this is my guess. And that's why he's allowed to short more calls here. He's probably taking some profits and putting them in and shorting the calls.
Yes, that kind of got that feeling as well. By the way, your friend, Mr. Schwartz, is listening, and he's sending you smiley faces. He says you're awesome. So it's mutual love between you and the Flow Master, as we call him here on the old program. Mr. Meatball, are you buying that as well? You think our friend is? Are we 3 for 3 here? That our friend is laughing all the way to the bank?
Yeah, and there was some news out on today on the steel that hit. So there might have been some timing around this. The steel industry wrote a letter to the administration about Chinese dumping, with Chinese dumping accusations. So I would not be shocked if that had something to do with what's going on as well.
And we're not done yet, listeners. We got an even weirder one to wrap things up on. Paper all over the place and some interesting opening and closing and weird stuff going on. So let's finish up here in good old L Brands Inc., ticker symbol LB, closing today 36 1/4, up about 12 cents or about 3%, or not 3%, 0.3% on the old day. These, of course, are the makers of all those fine ladies brands out there. And this is a name that does about 10, almost 11,000 contracts a day. Today, doing a little over 3x that, about 33,000 contracts, 34-1 puts over calls. So naturally, we were drawn out there, listeners, for an interesting one. Could be, we had earnings, of course, very recently in this name, just a few sessions ago, back on the 16th, I believe it was. So about a little over a week ago. Now we're still kind of in this post-earnings, a little bit of a sell-off here, a little bump today, but overall it's been a bit of a downward trend. Post-earnings, seeing someone coming in today for a little post-earnings action. Looks like it could be a bit of a roll, but if it is a roll, it's a weird one. It's going from out back in, which is kind of weird. We saw and also down a bit. It's the Nov 40 OC 32 half put spread went up today, a little bit of a put diagonal. 15,000 contracts going up on the Ox, trade in 70 cents over there on the Philly. No real open interest to speak of there, so opening clearly on the Ox versus we saw about 13,000 of the Nov 40 puts. Let's see what the total on the day was. Yeah, about 13,000 total on the day of these Nov 40 puts, including two chunks, about 11,000 for about 510 and about 2,000 for 520. Those leaning a little bit closer on the offer side of the spectrum, so it does seem like perhaps someone coming in for more of those. 18,000 open on that strike, so it does look like perhaps our friend is doing a bit of a back and down roll. That could be the case. Weird stuff. Looking open interest, like I said, 18,000. We did dig a little bit into this one. I noticed these Nov puts, actually kind of a pattern of rolling out here. These were opened back on July 10th for 13,000 times for $2.70. The stock was a wee bit north back then, about $44.15 back then. Seemed like paper was buying those bad boys. It seemed like they might have actually been rolled from August as well. There were some AUG 40 puts that traded that day, about 10,000 times for about $1.10, and some AUG 45s also traded as well, the puts there as well. So perhaps someone has been kind of consistently rolling out here. Usually he's been rolling out and rolling to more interesting or aggressive, or sometimes that same strike, that 40 strike, obviously deeply in the money now. So perhaps deciding a little bit of discretion, the better part of valor. Also, perhaps smiling a little bit at some of these puts working out for him, and looking to roll them in here to something in OC. It's a weird one either way, because you don't see backwards if that is a roll, or it could be something else going on. A lot of things going on. Let's look at the year that's been out here before we toss it over. The year that's been out here in LB, it's kind of been one consecutive downward trend pretty much the entire year. A few bursts of upside, but pretty much all downward, kind of following the similar trajectory for a lot of retail here in 2017, which is not looking good. Got a high of about, at the beginning of the year, about $78 was pretty much the highest it saw. It's never really touched those levels again. So interesting stuff here across the board. Once more, we shall toss it to the tub master over there in the options mecca of Savannah, Georgia. If you're done sending love letters to Henry over there, what are your thoughts here? You think this is a backwards roll? What do you think this guy's up to here in LB Brands?
I said you already gave away Henry's secrets that I read, but here's what I'm reading into this, and I don't think it's someone winning on the puts necessarily. It's probably someone who's deeply in love with the stock, probably protecting a long position down as we go, playing a little bit of house money on the put while he's still long the stock. Like I think many of us kind of believe that these retail stocks have been incredibly beat up to the point where they almost look like they may be going out of business. I'm not buying that. This guy's probably on a long position and figures it's cheaper to buy an October put than maybe get into a November put where he's got the earnings again. So just throw something at it, protect that long position a little bit longer, and hope that this thing's going to turn around. That's my guess, since he's just playing with a little bit of the cash against a losing stock position.
It is interesting. Obviously, you want to save himself some premium, rolling to a cheaper strike, a closer strike, a farther out of the money strike. Not always a sign that you're knocking it out of the park, but interesting stuff nonetheless. Mr. Meatball, take us home, sir. What are your thoughts on this weird, if it is indeed a roll, a backwards, funky roll, and what's your thoughts here on your favorite L Brands?
Well, I personally shop at Pink and at Victoria's Secret. Matt and I actually, when we go to the mall, we kind of recreate those montage scenes where I try on clothes and Matt shakes his head up or down whether I should wear it. And primarily, we do visit only L Brand stores.
Is there an 80s music montage going on in the background too, like a little 80s music?
Exactly. Yes, exactly. It's some sort of 80s montage where, I try on all these different outfits and Matt keeps shaking his head no. Then I finally put on the right bra and panty set, and Matt shakes his head yes. And then the music's over.
Yes.
But
then I
get ready for the big date.
Potato plate at you.
But I'll tell you, some of these retail names have been completely oversold. Some of the specialty ones, though, there's a real problem with some of them. Although, you got to think that, L Brands, especially a name like Victoria's Secret, where people like their clothing, but maybe they're, the men are a little embarrassed to go shopping in there. Their online presence should be able to do pretty well. This, Victoria's Secret should be Amazon proof, but clearly is not.
Yeah, they kind of just cast that Amazon net pretty wide, and everyone gets caught up in it. Costco, L Brands, everybody. So you're right. Maybe there is a little bit of overdrubbing. Our friend here preparing for perhaps some continued overdrubbing. We shall see. We'll keep an eye on this one. This is a funky one. This will go in our to be watched category. Meanwhile, speaking of funky, maybe he's got funky stuff in store for us. It's Thursday. It's time to break open the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. It's Thursday. You guys know the drill. It's time for Uncle Mike to dispense some options, wit, and or wisdom. Sometimes both. We get a double whammy. We'll see if we're lucky enough today. I was hoping he was going to talk about his L Brand selections and how he too goes through his own personal montage when he goes there. Instead, a little birdie is telling me he's going to talk about covered call strike price selection. How dare you, sir? We were on such a good roll there. Pun intended.
Well, I don't know. I don't really want to give the visual out there for the listeners of me going into those types of stores. With Sebastian, it's a different story.
We're
but
already
with
still
me,
kind of trying
really
to get that Sebastian image out of our head. It's already. I'm going to take a break if you don't mind and go do just that.
Got it. All right. Strike price selection for a covered call. There's been not too much going on in the adjustment world for me this last week. I've done a couple things, but nothing too noteworthy. Probably next week I'm going to give you the listeners of what's going on with the SPY diagonal strategy. Not a lot's going on the last week, but I'll kind of give you an update next week of just to keep everybody in the know of what's been happening. But for today, I want to go over something that if you are actually selling covered calls, now with the VIX actually a little bit higher, but not quite at a 16 spike like it was. Now there might be a few more people that are looking to do some covered calls. Market's a little bit stable, but the VIX is above single digits. Maybe now's the sweet spot for you. Who knows? But with that being said, I want to give you some thoughts on it for strike price selection. If you own a stock, now, of course, we've gone over synthetics on this show probably almost 650 times, I'm convinced, but you could also sell a put in a similar fashion to do the same trade I'm talking about. But today I'm just going to talk about doing a covered call for the sake of education on this. Now, if you are doing a covered call, let's say you already own the stock and you want to collect a little bit of income on it. You have three choices. You can sell an in-the-money covered call, you can sell an at-the-money covered call, or you can sell an out-of-the-money covered call. Let's start with the in-the-money covered call. Why would you want to sell an in-the-money covered call? Well, of the three, this is the one that has the most price safety. Now, I hate to say that this is the safest one or this is the least risky one, because it isn't necessarily. In option trading, there is no such thing as more risk or less risk. You can't get rid of risk or gain or lose risk. You simply shift risk is what you do. Now, of course, you can make the argument that if I'm being more leveraged or trading more or less contracts, yes, of course, you're going to have more or less risk that way. But you really can't give more or less risk. You're simply shifting risk in one way, shape, or form. By selling an in-the-money covered call, you're shifting risk by taking away more upside in the stock. You're getting guaranteed income, and you're getting guaranteed income with any covered call that you sell. but you're taking on an obligation. When you sell an in-the-money covered call, let's say XYZ stock is trading at 32 and you sell the 31 covered call, you have the obligation to sell the stock at 31 if called upon to do so. Now, by doing that, you're going to be obligated to take a $1 loss on the stock from where it is right now. Of course, if the stock goes below 31, then, well, who cares? The stock went down anyway. It's a wonderful thing. But if it doesn't, or if it goes higher, you're not going to participate on any of the upside. You're actually going to be getting that $1 loss guaranteed. Now, the question then becomes, is the income for that worth it? Well, if you're getting $2 or $2.50 or even $1.50, whatever you deem as a good price, then it may be worth it based upon your risk reward. But the thing to think about is that you are going to get no upside on this whatsoever. You're going to get that income, and you're going to get that income combined with that guarantee. You're going to get guaranteed income, but you're also going to get a guaranteed loss in the stock from where it is in one way, shape, or form. And you have to be able to live with that. And if that's something with which you feel comfortable with because it's more conservative from the standpoint of price, then have at it. That's one way with which to go. Now, the second way with which you can sell a covered call is at the money. XYZ stock is at 30. You sell the 30 covered call. Now, the advantage of this is typically where you're going to get the most extrinsic value of the three. Now, what is extrinsic value? That is time value. In options, there's two types of values. You have intrinsic value and extrinsic value. Intrinsic value is the in-the-money value that exists within an option. Time decay has no effect on that whatsoever. And you have extrinsic value. Now, that is affected by time decay. It's affected by implied volatility. And it has effects that are not, it can have effects to it based upon things that are not having anything to do with the underlying itself. So if you want the most pure income, then an at-the-money covered call would be the way to go. With that being said, you, of course, have disadvantages to that as well. Should the stock go down, you don't have that protection in place of the in-the-money covered call. And also, you won't have any upside whatsoever. Your hope, if you're selling an at-the-money covered call, is basically if the stock stays the same, that you just get your income. You just don't want it to go down. If it goes up, of course, it's not going to make, for your actual trade itself, it's not going to make one bit of difference to you. You're going to get your income one way or another. You're just obligated to sell the stock at 30. The frustrating thing for most people when they sell in-the-money covered calls or at-the-money covered calls is when the stock goes higher, and they always seem to think to themselves, man, if I would have just bought the stock itself, I'd have been better off. Oh, I hate these covered calls. You can't think that way. You have to be happy from the fact that you got your income. And that's what you were setting out to do in the first place. Now, the final way with which to trade a covered call is with an out-of-the-money covered call. You buy the stock at 30, you sell the 31 call. Now, by doing that, in some ways, you get the best of both worlds in that the stock can go up a little bit and you get that income. Once again, that income is yours no matter what. The stock goes up, down, or sideways. That income stays in your pocket no matter what. You just simply have to take on the obligation of selling that stock at whatever price the strike price is. The advantage of doing an out-of-the-money covered call, you get to have a little bit of gain on the stock should it go higher. You also get a little bit of premium when doing so as well. Now, that would be a situation to where you are, I would say, bullish neutral, meaning you believe the stock's going to go up, but not quite that much. And if the stock were to go up to that strike price, you'd be perfectly happy selling it anyway. That's a situation with which to do an out-of-the-money covered call. Final point I want to cover before I turn it back over to the host in the hosting chair is covered calls for protection. Oftentimes, I've heard people say through the years, oh, I'm selling some calls on the stock as a kind of a means of protection or a little bit of a hedge. From the standpoint of protection, a covered call is a Band-Aid. Now, what do I mean by that? Well, let's say XYZ stock is at 50 and it goes down to 49. Well, that's what I would consider a paper cut in the stock. And for a paper cut, a Band-Aid's a very appropriate medical treatment. However, if the stock were to go from 50 to 31, that's a severed jugular. And if that's the case, if you try and put a Band-Aid on that, it's not going to really do much good, if anything at all. Same would hold true with your $1 call that you sold on that stock that went from 50 to 31. That's a severed jugular, and expecting that to protect is just not going to work. So if you are thinking that you want to sell a covered call as a means of protection, nothing wrong with that, but just have an understanding that you have Band-Aid level protection when doing so. And that is the covered call strategy block for today. And let's do our best to not think about Sebastian and women's underwear.
Let's just not do that at all. But let's before we wrap up the strat block here, Mr. Uncle Mike, give our listeners what your preferred method is. I know you're probably mostly, I'm going to guess off the top of my head, probably somewhere in the 2 to 5% out of the money range. But do you typically stay there? Do you vary? Do you ever go in the money? What is your preferred methodology when writing covered calls?
I would say all three. I mean, typically to get into a stock, I'll sell an out-of-the-money put with the hopes that the stock dips to get into it. And then I like to sell out-of-the-money covered calls once we're in it. If the stock has had its day and we're ready to sell it, if we still think that maybe we want to hold on for a little bit more and there's some really good premium out there, let's say we've ridden the stock from 42 up to 50 and we want to still think it might have some upside and it has really good premium on it, then maybe we'd sell like a 47.5 or a 45. Well, maybe probably not a 45, but like a 47.5 to get out of it in that situation. So I would say typically all three, but once we're actually in stocks, probably, 2 to 5% out of the money. You have very wise birdies.
My birdies are quite smart. All right, it's Thursday. We still got a little bit of time, so let's bring some of you guys onto the show. We'll open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. Welcome to the mail block portion of the show where you guys take the reins, ask us questions. Sometimes we flip the script, ask you guys some questions as well. We thought we'd mix it up on a day like today where it's a little bit quieter out there. We thought we'd talk about what everyone else seems to be having on the brain this week, which it is fight week, spectacle week, call it what you will, the big boxing versus MMA match going up this weekend. A lot of people hitting us up with questions about that. So we thought we'd look at it through the lens of options traders. We pulled up the odds for this bad boy, and Floyd's about a minus 400 favorite, Connor about a plus 300 underdog. So we thought, let's look at it in option traders terms. If you were going to buy a call on one of these bad boys, what would you do? Would you buy the Connor calls? So they cost about $1 and they pay you $3 if he wins. Granted, that's more of an out of the money type call, probably a low delta on that bad boy. Versus the Floyd call is more of an in the money call, meaty, expensive, costs about $4 and they only pay you $1. But the much higher probability of those bad boys expiring in the money. So you're going to buy your out of the money Connor calls, easy to say. Are you going to buy your in the money Floyd calls? Are you going to say I'd rather just sell premium, or are you in the camp of whoever wins, we lose, to borrow from that great film AVP? Let's start way out in the South again to the Tubster, the Tubomaniac. Are you excited for this fight / spectacle? And if you were buying calls or trading this, how would you go?
I'm certainly not selling premium in this. The public is very interested in this for sure. I'd be buying premium in the fight itself. And I'm not buying Conor McGregor calls. I'd love to see it be a good fight. I just don't think there's any chance he stays in it. Whoever wins, we lose. Doesn't really affect us either way. There's a winner. It's going to be Vegas, and it's going to be boxing, and it's going to be MMA fighting. But I'm a buyer of Floyd calls.
There you go. Interesting. Mr. Meatball, same question for you. What are you buying? You going in the money, out of the money, or are you just staying the hell away?
Whoever wins, we lose. I'm sorry, but this is going to be another Manny Pacquiao Mayweather fight where everyone's excited for it, and then Floyd Mayweather just dodges and jabs and bores the crud out of everybody. And we're all angry that we just spent $100. But you have to buy the fight. I mean, everybody's going to be watching it. Everybody's going to be talking about it. And really, if you don't spend the $100 on it, it's very difficult to complain about how bad the fighting is.
That's true. You have no skin in that game.
And so, of course, I'm buying the fight.
By the way, thank you for buying the fight and inviting all of us over to watch it for free at your house. It was very nice of you.
Yeah. Is that right?
The Sebastian fight party you just announced here on the show, and all listeners invited as well. If you can find him in Riverside, you too are welcome to join the Sebastian fight party. Save $100 and have Sebastian buy it for you. That's what I always say. And last but not least, Mr. Uncle Mike, you're closer out there to the meatballs, so you can probably get there first. What are you doing? In the money, out of the money, or you staying the heck away?
You got to go with Merriweather in this situation. I think it's a really cool thing, and the idea of what they're trying to do with it. But I think regardless of what the odds are, I would position my option wager accordingly with risk reward as best as I could to bet on Merriweather because he's the better boxer.
Yeah, everyone knows I'm a diehard MMA guy, but I'm not buying what Connor's selling on this one. I have to go in the money on some Floyd calls by 4. Some people I've heard, the sharps, quote unquote, who track this stuff, saying this is one of the best betting opportunities in the history of Vegas because he's been bid up. They bid up Connor so much, he's only 4-1 for Floyd, which he should be probably much higher than that. So interesting stuff if you're into such things. Our audience clearly into it, and also our audience saying they want to go for the out of the money. They want to buy some Connor calls, 44%. Maybe that's why this fight's happening. People are behind that guy. 24% saying the old AVP. Whoever wins, we lose. 19% buying the more reliable Floyd calls. 13% say I'd rather sell the whole thing. Interesting stuff. All right, let's move on to this one we got here from, easy for me to say, Salman Azhar. If I pronounced that incorrectly, I do apologize. I probably did. It's a hard one. Let's see. He asks, to sell weekly SPX options against a long SPX quarterly option. So this is a strategy we've advocated all the time. Go a little bit farther out, sell nearer term to finance it. It's a very popular strategy. He asks, are the call or put diagonals better for beers? The math is the same, but practice? Question mark. I don't know. I don't think the math is really the same. Obviously, you're looking at it differently. Obviously, synthetically, you're looking at similar things. But if you're going from a pure vol juice perspective, you're going to get a lot more juice selling those out of the money puts than you are the out of money calls. So I think the put diagonal is going to be a little bit different from that perspective. Let's go back around the horn the other way. Let's start, Mr. Meatball. Are you more of a fan? And then, he also says he's a bear, better for beer. So he's a bear on the S. He wants to buy SPX puts or calls and then write weeklies against it. What's your advice? Go.
I mean, if you're bearish, they're synthetically the same thing, but it's always easier to trade out of the money options in terms of bid-ask spread and getting them filled than it is in the money options. And then but I do like that as a strategy. The other thing you got to make sure though is that you're buying the right contract. So, especially in those back months, there can be some weird vol differences between the regular January and the Dece quarterly, for instance. So spend a little time examining all those strikes, all those contracts they have available for you, and make sure you sell the most expensive piece. And same thing on the strike selection. Spend a little time looking at the skew curve. That is where you will, that is where the strategy, if you pay attention to vol and you learn vol, that is where the strategy has edge. If you're just want to make a big directional bet on the market going south, I don't like, this is all right. It's fine. But, spend a little time and the strategy goes from, losing if the market rallies and winning if the market drops to potentially breaking even if the market rallies small and winning bigger if the market drops.
This is the danger of the tweeters and the tweets because it's hard to fit all the details we want here into 140 characters. That said, Uncle Mike, you have a preference here? What's your poison that you're picking for our friend Salman Azhar?
No, I would agree with Mark in that it is typically easier to trade out of the money options from the standpoint of the bid-ask spreads that exist on it. So I would probably go that route. If for some reason there is some type of weird skew that exists for whatever reason, maybe go with the calls, but I don't really see any reason why there would be. So I would like that one better. And if you are doing this, for those of you out there that are listening, if you're doing this on SPY, the other thing to factor in are dividends. SPY does have dividends, and make sure that you have that factored in when you're doing this if you're an SPY person doing a similar strategy.
Yeah, he's talking SPX, but right, SPY. We get those emails every quarter. What's going on? And I don't have to look. I can just see the subject. I say, okay, you've been selling calls and SPY. It's like clockwork. But sure, I'm still kind of scratching my brain as to why this guy would really want to go the meaty calls, tying up a lot of capital that way as well. So I'm hard pressed to think of a reason why he should. Maybe Mr. Tubster from the options mecca of Savannah, Georgia, has an answer for our friend here, Mr. Azhar. You have a preference here, Mr. Tubby?
From the broker's standpoint, I'm not a trader. My gut would say if I'm playing for the bear side, I would probably want to be long the longer dated put and shorter dated SPX puts. Just from the practice that if I am a bear, I'm thinking the put will probably hold its value a little bit better in a tranquil market, where I think the long dated call, will probably lose quicker. That would be my thought process. But then again, that's not my school of work so far. Over the last 20 years, I have not been a trader necessarily. So I think Mark and Mike answered that a little bit better than I would be able to.
I have to imagine that if you are going to do this and you do say you are bearish, then you're going to have to have a very quick trigger finger, especially on that short puts you're writing every week. Be ready to take those off when the worst starts going against you, because they will come back to bite you. That gamma gets pretty nasty pretty quick in that last week there. But that said, I think pretty much collectively we're all on the same page. Not a lot of really arguments here to do the call diagonal, but if you're so inclined, go for it. But put diagonals. Clearly, I think the best option here. Let's keep on rolling into our final segment. Time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we break down what's up, what we're watching for the rest of this week into the weekend. Really quick refresher on what we were talking about at the top of the show. Ulta off about 3.5%, so it's appeared a lot of those really bad sell-off earlier. Only down looks like about 7 handles now, down much more. It was down almost 20, I think, earlier when we first started talking about it. So clearly, maybe calmer heads have prevailed out there. We'll keep an eye on that one. And good old GameStop off over 8%. So starting to get close to that straddle, which is right around a 9%. So GameStop extending its losses in the after hours. Ulta pairing theirs. We'll see if that trend continues. That said, a lot to watch the end of this week into the weekend. We'll start with you, Uncle Mike. What's on your radar for the rest of this week?
Jackson Hole, baby. Wanted to see what's going on out there. And just as per usual, the Drum Twitter account, seeing what we got going on tomorrow on a Friday. It seems like on Fridays there's a lot of unpredictable, crazy things that have been happening lately. So that is what we're looking at.
I don't know why you're watching Jackson Hole. It's a little bit, I'll have to break it to you, Uncle Mike, but it's still a little too early for skiing. So I'm sorry if that's what you're watching out there, because no skiing weather. Still only August, so unfortunately, no skiing out there in Jackson Hole. Same question for you, Mr. Meatball. What are you watching the rest of this week, sir?
I'm watching what Mike's watching. The Amazon Whole Foods deal closes on Monday, so, maybe I'll watch that. Yeah, I'll watch the Amazon dumpster fire to see what happens.
Well, I don't know why two of you watching Jackson Hole. There's no skiing going on out there. I don't know what you guys could possibly be watching out there in the summer season of Wyoming. And last but not least, the Tubster. He's on vacation. But what's catching your eye for the rest of this week, sir, aside from maybe some fine dining in the southeastern U.S.?
Well, I'm kind of shocked that our two trader extraordinaires haven't touched on probably the most exciting story in the entire marketplace right now. That's Valerie Wilson. Who's trying to raise money through GoFundMe to buy Twitter.
Oh, yeah, she wants to buy Twitter.
That's what I'm watching intently. Other than that, it's going to be a lot of eating.
Sounds like a good trip, sir. I think you're going to have some fun with that. You're right. GoFundMe to buy Twitter for somewhere around 11 to 12 billion so she can stop the tweets. There we go. Good luck to her with that endeavor. That music means we're done, listeners. Time to wrap up this crazy rolling roller coaster here. But before we go, one last trip around the old horn, see what everyone's cooking up. Let's start with the meatball one last time. I hear you guys have a big event on the horizon. Tell us about it, sir.
Yeah, September 27th through 27th, 28th, 29th. We're doing our Pro Trader event. We're going to have a ton of speakers. We're going to do the option block live. So you want to come and meet the famous Tubby and Mark Sebastian and Mark Longo. You can join this event. You'll get to see us live. You'll your first hour of trading will be so much better on Friday. Will be so much better than everybody else's because you'll have gotten to listen to the show live and nobody else will have. So you'll only the 100 or so people that are in the audience are going to get that edge in the morning.
There you go, get that edge. And who knows, Tubby's down in the southeast, so he may be quite shrunken by the time he gets there, so he may not be living up to his moniker. That said, Mr. Tubster, anything you guys got coming up that may interest our listeners, sir?
Not quite yet. We're close, though. I'm looking forward to, hopefully we'll have some news for you in a couple of weeks here. But other than that, I'm just going to be watching the markets, listening to Trump, trying to figure out how that trade goes every time he speaks, and enjoying some sunshine, some good food the next 4 or 5 days.
There you go. Enjoy yourself, sir. And last but not least, there's always sunshine and good food in St. Charles. Uncle Mike, if I were so inclined and I wanted to go to St. Charles, have some good food, and also perhaps save on some ticket charges, what should I do?
Well, you should give me a call. If you are fed up with paying that darn ticket charge, we have relationships with brokers to where we don't pay ticket charges, and any client of RCM does not pay one either. If you're interested in learning how you can possibly save money on your commissions, feel free to give me a call. I am at 312-212-3531, or shoot me an email at mtosaw@rcmfs.com. And if you do become a client of RCM, I will throw in a $100 gift card for anything option pit you would like. And on top of that, for today and today only, in honor of Tubby being down in Georgia, I'll throw in a box of my own personal. This is something that I actually do. This is a hidden talent of mine. I actually make pralines. They're popular down in Savannah, but I actually do. It's a weird hidden talent, I know, but I will personally make you a box of pralines if you become a client.
Wow, can I get on this pralines offer? I'm not a client, but it just sounds good. I didn't know you had Uncle Mike brand pralines going on over there. You've been holding out on me, 600 episodes. Never a single praline here. I'll keep that in mind, sir. Good stuff. Hit him up. If for no other reason than the pralines alone, Tosaw at rcmfs.com to learn more. And on behalf of the praline maker himself and the Tubster and the Meatball and good old me, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, sending in such great questions, tuning in live, all the fun stuff you guys do. We'll see you tomorrow, not for the option block, but for a lot more live shows. If you're listening live, we got Vol Views tomorrow, we got Twifo tomorrow, all the good stuff you come to look forward to every Friday. And for option block, we'll see you here next Monday. Have a great weekend, everybody.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.